Dividend growth investors, bonjour, this is Mikey Roux, founder of Dividend Stocks Rocks and passionate investor. So today we're talking about the market expectations. This morning, the US government posted their GDP, so economic growth, that was negative, minus 4.8%. What's the answer on the stock market in the future before it opens? Well, the S&P TSX is up by 1.26, the Nasdaq is up by 1.40, and the Dow Jones is up by 1.32. So basically, as of as of April 29th at 9 a.m., the market is up while the economy is down 5%. How come is that? I'll get that in a minute, but first I want to thank you because yesterday we just hit 1,000 followers on my YouTube channel. So I want to thank you for watching this video, for following me, for liking this video, and if you haven't done so, just click on the subscribe button right there and you'll get my notification whenever I post a new video about the stock market, which is probably like 2 or 3 times a week now. I've started this during the crisis. The response is good, and as long as you're coming back asking for more questions and putting your comments on and liking those videos, I'm gonna keep this pace. So now back to market expectations. Well, there's a big thing here is the stock market isn't crazy. They do know that the economy is down right now, and it's not why the market is up. Actually, the stock market prices tons of information every day, but not for the next day or not for in 3 months. It prices them for the next 10 years or 15 years. They're looking upfront a while ago. So while you may have wake up this morning saying, oh, we're going to have the GDP stats, and I really wonder how the economic growth is going right now. Well, the market was already expecting that for several weeks. They already ran their algorithm, their calculations, and they were pretty much expecting that minus 5% that we just got this morning. So no surprise here for them. They knew about that. Same thing happened a few weeks ago with job claims. We were just like, oh my God, jobless claims are up like 3 million. How is this? This is disgusting. It's impossible. Everybody's going to go bankrupt and so on and yada, yada. And then the market was just like, I just knew about it. So I was expecting that. So it's pretty much like when you're having your first snow in November, if you're living in in North Canada, actually, you're not surprised. You might not like snow. You might not be happy that it's like the cold and winter coming in, but you expect it. It's no surprise. Your winter tires are on. You have your toques and your mittens and ready, and it's just normal. So don't put too much there. And for those who are waiting to see stabilization and then things that are going to run smoothly and then finally get back on the stock market, please rewind your tape, go back in time and look at stats and the market back in 2009. Remember, big financial crisis in 2008, lots of craziness happening there. The Fed was manipulating the market once again by putting like trillions of dollars into the market. And then in 2009, the bottom of that bear market was in March 2009. At that point, unemployment rate, jobless claims were up by 30% in April, and yet the market started to bounce back. Earnings were disgusting. They were negative. They were missing the targets all year long. We suffered a bunch of dividend cuts, and yet the market was up. Actually, the S&P 500 went up by 24% in 2009. So when you think about it, nothing was really doing well in 2009. All economic data were bad. All companies were not doing very good. Actually, lots of bankruptcies, lots of dividend cuts, as I mentioned. The consumer sentiment were down, and yet the market was up. Is it because it's crazy? No, it's because they knew about that. They knew starting in 2008 when the financial crisis happened, they were just thinking, you know what? Bankruptcy is going to happen, dividend cuts going to happen, companies are going to miss their earnings report in next year. It's all expected, it's all priced in. And then all of a sudden what happened is if you expect a company, strong company like 3M for example, or Canadian National Railways putting out okay results and you were expecting bad results, where you're just saying, oh, it's better than I expect. So it's probably time to buy shares, because in a few years from now, we're going to feel very good about that. So if you are waiting on your computer to read in the media saying, oh, everything is good, you're probably missing like a good rebound of like 30–40%. And you know what? My bet, and I'm going to go public on the record for that, my bet is we're not going to go lower than March 23rd. I have plenty of reasons for that, and I will explain that to you in my webinar that will happen tomorrow if you're not a DSR member, and you get all the good stuff if you're a DSR member right away this afternoon. So subscribe to the webinars to make sure that you get all this information for today or tomorrow. And until next video, stay invested.